Good morning, all. Welcome to Anand Rathi Morning Commodity and Currency Podcast. Starting with precious metal update, which is lingering near all-time high, let's see what's happening around. Gold prices reach a new peak, marking the fourth consecutive session for the record highs. This surge can be attributed to a combination factors including escalating tensions in Middle East, appreciating of anticipation of interest rates in cuts in US and persistent inflation, all of which have heightened the appeal of gold safe haven buying. Also, latest data from World Gold Council states central bank to continue buy gold in February, even though at a slower pace, keeping the sentiments positive. All over, we anticipate bullish run to persist in the day trade amid heightened volatility ahead of non-farm payrolls, which is due tomorrow. Technically, intraday support is around 69,237 and 69,026, whereas resistance is seen around 69,950 and 70,150. Coming to base metal updates, copper prices stayed positively as signs of increased demand, fueling optimism for record levels. Powell's recent statement indicates that central bank with base rate decision on incoming data likely to support further prices. Investors are monitoring smelters expansions and growing Chinese stockpiles, which suggest lingering demand weakness in certain sectors. Shanghai exchange inventory will also be closely watched in the following weeks to assess demand strength and potential capacity adjustments. Technically, copper intraday futures support is seen around 775 and 770, whereas resistance is seen near 800 or 805. Continuing with energy update, again oil prices are soaring high. Let's see the reasons. Tighter supplies could keep the undertone positive for oil. However, technical correction cannot be ruled out as prices are nearing overt reasons. Meanwhile, in the latest development, the US cancelled the latest strategic reserves refill plan amid high prices. This might help prices to cool down a bit, though OPEC cuts could keep the broader oil markets tight. Technically, crude oil intraday support is seen around 7,990, 7,099 and 7,070, whereas resistance is around 7,190 and 7,210. On currency front, given the ongoing strength in dollar index and elevated crude oil prices, rupee might stay under pressure in the near term. RBI is expected to keep the repo rate unchanged this week and then cut the rate in third quarter. The key risk to USD INR trajectory will be further pushback in Fed's rate cut cycle beyond June, whereas dollar to take breather from soaring above 105 levels as trader taking remarks from Fed Powell as reassuring on the likelihood of interest rate cut this year while waiting for latest US labor market readout. So that's it for today's update. For major economic events scheduled today are US initial jobless claim, US trade balance, and EIA natural gas storage data. That's all for today's podcast. Have a successful trading day. Thank you.